Hey everybody, today we have myself and guest host Eric Crest, and we are joined by Chris Petrovic, who was most recently the SVP and head of corporate strategy, M&A, and business development at Zynga. He's overseen a lot of high-profile deals, which we'll go into, such as the acquisition of PuzzleSocial, Harpan, Gram Games, Small Giant, Peak Games, and most recently, Rollic Games. Prior to Zynga, Chris was at a number of places, but also most notably headed corp dev and biz dev at Kabam. In our conversation today, Eric and I will be speaking to Chris about his career in gaming, the role of corporate strategy, M&A, and business development. And our goal is to give the audience a better understanding of how big publishers think about M&A specifically in the future of the games industry in general. And I'm sure the many lessons learned and insights from Chris based on his great experience. Thanks for joining us, Chris.
Thanks for having me, guys.
So I work with Chris at Kabam. I had the pleasure of traveling with him and part of helping boil the ocean back in the relatively early days of mobile. And I think the best trip I ever took was the Gamescom. The only time I ever went to Gamescom was with Chris. We met with a bunch of very, very arrogant European developers thinking that they were going to be the bee's knees of development, and all of them actually crashed and burned. And I'm not going to actually name any names, but it was pretty funny, actually.
You're as positive as ever. Just like
I know. I was just thinking about it. Like, it was a really fun trip. I mean, it was really stinky, and everything about Gamescom is true. It's totally stinky, and it's way too many young kids that don't shower or don't use deodorant or whatever. But it was like, it was a sight to behold, right? It was a pretty epic event. So
yeah, it's EA on steroids.
Yeah.
I mean, sorry, E3.
E3, yeah. Oh, for sure. It's completely different. Anyway, so Chris, I mean, I know what Chris does because I've actually done it. I did it at EA, and I did a little bit work on Kabam. But what I would love to hear, I think for people that are in the audience, is that exactly what do you do? Like, give us your background, your career, and then like what exactly corp dev is all about, like at a high level, right? And
I'm glad you're asking me this question, Chris, because one of the things that I deal with all the time, mostly internally at companies, is trying to educate people to delineate between the differences of corp dev and biz dev. And it's always so hard because they're two separate functions, but they sound really similar. And so people tend to conflate the two quite a bit. So using Zynga as an example, so corporate strategy and M&A were, to me, two sides of the same coin. Corporate strategy is the exercise of looking into the proverbial crystal ball to figure out where the company, where the market is going, and where a company needs to go relative to the future trends that you're seeing. And obviously, M&A is a way to a tool to use to execute on a corporate strategy, especially when you're thinking about things like consolidation and scale and all of the things that we're seeing in mobile that's becoming increasingly important, or in gaming in general. And then business development is more of a strategic partnership commercial exercise where you're doing, publishing deals in China, you're doing licensing deals with Hollywood IP, you're negotiating service contracts with folks like Epic and Unity, things of that nature. So very transactional, very outward facing, very forward looking, and all really fun.
Awesome. So how'd you get started? Like what's your career track?
Gosh, so I started in consumer internet back in the late 90s, where I got bit by the internet bug and decided to become an entrepreneur, not knowing what the hell I was doing, down in LA at the time, and was part of a few startups, none of which are of any consequence today and haven't been for a while. Then went into venture capital for a while. I became an EIR of sorts at the VC firm that invested in my two startups. That was right around the time that the bubble burst, for those of us that are old enough to remember the early 2000s. And then went on to become a digital leader, so to speak, for lack of a better term, but a digital executive at analog companies. So I started at American Greetings, was the head of BD for the digital group there, then moved to, from there, so long ago, went to Playboy, was VP of digital there for 4 years.
Nice.
Plus years. And that's where I first got into gaming. So we can talk about that later.
Wait, Playboy, hey, don't like just completely go gloss over that, man. Playboy? Were you at the mansion?
I was many times, but all for work purposes.
Wait, were you married at the time?
I was, and my wife, ironically, worked at Maxim at the same time. So,
oh my God, so you're just surrounded by beautiful women. That must
just
have
the
been
one at
tough.
home. That's all I remember.
I got it. I got it. You're actually your wife is pretty. I'll give you that. But man, Playboy Mansion and everything. That's awesome. What a way to get a start in gaming. I remember when there were Playboy Enterprises, right? We're like trying to license and do things in gaming.
Yeah, and there was a Playboy Mansion game. We licensed our IP for in-game integrations, for a bunch of games, and then did a Facebook game. And then from there went to GameStop and started and headed their digital ventures group. And that's when really things got exciting on the gaming front in terms of deploying capital. We grew revenue by $500 million during my time there on the digital side. So, really started getting enamored with gaming and just architecting the digital strategy for a retailer that they ultimately did not follow. Which is why probably they find themselves where they are today.
Well, okay. So here's the irony. So when I was at Kabam, I was talking to him about GameStop, and part of my my negative or bearish thesis on GameStop was just the realization that the management team just had no clue what to do with digital, and the fact that they basically let you go and kind of like divested all their activities in digital because it just wasn't part of their lexicon. And so meanwhile, they're talking to Wall Street and saying, oh, yeah, we have this digital strategy. We're going to move into digital. And I'm like, dude, the reality is just not matching up. Anyway, go ahead. Continue.
Yeah, no, I mean, Chris, you and I talked about this when we were at Kabam. It was the classic. I mean, that was classic textbook innovator's dilemma there. Right. And they knew they had to do it. They did a little bit more than pay lip service to it. But when the rubber met the road and they needed to make the investments, ultimately what they would talk about is, well, why would I invest here that has a 10-year terminal value when I can open a store and get 30% CAGR, in year over year? So
right, and they were so freaking good at brick and mortar, like they fucking crushed it. Like they there's no better operators at the original management team at that. So anyway, all right. Then you came after your frustration at GameStop, and then that's where we.
Then I saw the light and decided to go into pure play, game development, and told myself that I would take a break from being in public companies because I had done 3 in a row, and then found myself at Kabam and had the good fortune of working with you and Kevin and Kent and a whole bunch of other great folks, and were able to do some great things around acquisition and licensing, and ultimately a great exit for Netmarble and the Kabam team and shareholders. And then, as that was in its mid to final stages, I would say, of percolating that transaction, I got a outreach from Zynga, and as Frank was joining the CEO role there from his board position, was really enamored by the opportunity to take a swing at turning the company around. And as he told me in our first meeting when we chatted about it, he said, "Look, you can't fall off the floor. So let's come on this ride and see what we can do." And for me, as a deal guy at the time, what was really attractive was just the amount of cash that the company had on hand, which is mainly what they were valued for, plus the value of the building that they owned at the time. So for me, that was the ultimate access to liquidity, knowing also that the building was going to be in play at some point, and being able to deploy that. And it really helped solidify my belief in the ability to turn around, because Frank was really, really certain about inorganic growth, i.e. M&A, being a key part of it. So to be front and center and get the opportunity to do that, fast forward 4.5, 5 years later, and there's just been some great outcomes. Yeah,
I think Frank gave me the same pitch when he was on the board of Zynga, and what his strategy would be for the company. And I think both you and I was just hook, line, and sinker, right? I believe in Frank. I think what he does. And so actually that's kind of the next question. It's like, what do you think Frank did that kind of turned this company around? I mean, the stock was at like $2.50 for a long time, and now it's
$1.88 when he and I joined.
Yeah, right.
Wow.
And so, I mean, I know what he did, but I want to, from your perspective, first of all, structurally, but then also from an M&A strategy, he basically unleashed the Kraken, right? And you're out there buying all kinds of crap, good crap, sorry. You know what I mean? But what were the keys to the success that you saw, and what did Frank really kind of enable you to do that you couldn't do at Kabam, for instance?
Well, I mean, one was just the sheer scale, right? Yeah. So, at Kabam, the while there was liquidity and cash available to do M&A, it was 1/10 the size of what Zynga had. So, at some point, having access to that much, even if you don't succeed on every one and you succeed on some or most, then you have kind of the VC private equity model, and it's still a success. But I would say, getting back to your question, first of all, it helped to have somebody in that seat that actually understood free-to-play mobile. So I think that was number one. When you look at, his predecessor, there was a huge difference in capabilities with Frank having overseen mobile at EA during the tail end of his tenure there. I think it also helped to have an executive in Frank that was able to have pattern recognition of what it feels like and looks like to go from high to low and back up again, which EA had done during his time there. And as we talked about a lot in management meetings, there were only so many finite things that are possible that can go wrong and that need to be fixed in a gaming company when things are not going well versus going well. And so having that pattern recognition of what works, both when things were going well and when needed fixing, really helped. And then he brought in, a whole cadre of his former EA peers to help him and be part of the management team to craft the turnaround. And so they identified great franchises that had been under-leveraged in Zynga, Poker, and Words with Friends. And you guys know that the term forever franchise was something that he coined early on. And it has proven to be super relevant and important for companies in our category and beyond in terms of continued success and looking at the business more as an annuity than a hits-driven business, knowing that you always have to create new games. But you have that hedge with really dependable, stable revenues coming off of longstanding games and franchises. And doubling down on that, culling down the number of new game starts, diversifying the talent base globally, and away from the Bay Area. All of the things that are not necessarily rocket science, but take somebody that's aware enough of these necessities to actually execute and bring good people around them to help.
And Chris, maybe I could ask in terms of the strategy when it comes to M&A, because it seems like after you came to Zynga, that if you look at the M&A strategy prior to your arrival, it was more, the success rate just wasn't quite there since after you came, but it also seemed like there was a shift from earlier stage companies and betting on earlier companies to later stage companies. But when you came in, was there a conscious kind of shift in terms of how you evaluate and the kinds of companies that you guys are going after?
Yeah, I would say a couple things that were apparent to me. And to your point, one of the first things I did was go through and do a historical teardown of the M&A that Zynga had done from the time it really started getting aggressive in 2010.
Wow, yikes! That must have been ugly.
Up to 2016, and to your point, Joe, there wasn't a real positive return on investment picture there.
Okay, so, can I just pause you for a moment here? Okay, there's two things that he's already done that make me crazy a little bit, is Mr. Chris, is that he is so freaking nice, right? The way he actually positions things is the reason that he stays in his roles, right? So when he said the predecessors of Frank Gibeau didn't understand mobile, right? He said it in such a nice way, right? What I would say is that Pincus and Matrix had no business running a free-to-play mobile company because they had no idea what they were doing, right? And so I just wanted to, I've said this about you before on the podcast. Mr. Petrovic is really, really nice guy, and he says he's very diplomatic about what he does, and that's what makes him good at what he does. Anyway, sorry, continue.
Chris, thank you. You're like the yin to my yang on this. This is amazing. So where were we?
Sorry.
Talking about the M&A. Yeah. So one of the other things that I noticed when I got here was that there wasn't any kind of framework around an integration philosophy or approach. And for those that are in M&A or have experienced M&A, we know that the vast majority of acquisitions tend to not work out. In fact, there's the traditional 80-20 rule, which is 20% of your M&A ends up driving 80% of your value in kind of as a base case of goodness. And so starting from scratch, one of the first things I focused on was building that framework alongside with the management team that would actually be responsible for a large part of the integration, but really just creating a framework where we were really clear and transparent and honest with both ourselves and the companies that we were looking to bring into the family about how things would look kind of post. And so, and then I think third is just a disciplined approach to looking at things. I think if you look at the history of Zynga, the prior M&A teams had a reputation for being very aggressive in terms of going after targets, engaging with them, getting data, and then not following through. And I really spent the first 12 to 18 months of my time at Zynga when I was meeting with developers, apologizing for the actions of my predecessor teams. And so, reestablishing a positive reputation, which actually as Eric alluded to, I pride myself on having that in the industry, because as we all know, it is a small industry and there's no need to be a dick and not be successful at the same time. So laying that groundwork, having the management team out in front of developers all over the world, telling and retelling the story about what we see as the opportunity, and then actually doing what we say. And so I think that led to us, and Joe, you listed the acquisitions. They started off small because we needed to prove ourselves as a new organization and as an M&A team that we could actually do an acquisition on a small scale. And then, the ones you listed, it's not a coincidence, by the way, that every deal that you listed up until Rollic was sequentially larger in value, right? And so we started getting permission to do larger deals, to deploy more capital. And as we showed success to our board, to our investors, to the street, to banks that wanted to provide us capital, it became easier to do those things. And so, the discussion around buying Peak was no more or less intense than the discussion around buying PuzzleSocial, for example, because moment in time where we were from an experience perspective was completely different. And so just having the framework, having the discipline, having the management expertise, and having the clarity of vision all really helped without feeling like you were missing out. I think back in the early days, there was a lot of FOMO going on. Have to buy. Got to get this target, got to get that target, and then just fill the funnel and then just figure it out. And that's really not the way to do it. For us, it was a long relationship building process. I always make the analogy to a marriage. We dated for quite a long time with every one of our acquisitions that became part of the family, and knowing that we would be in this for the long term, that it wasn't just a quick hit for them or for us, which is super important. And it just, from there, it just becomes much more simple and straightforward.
And your approach seemed to be the city-state model thing, where you just basically let them run their own thing. Is that still true? Because that was Frank's philosophy even at EA.
Yeah, I think that was true for us, especially as you got studios that were at more scale. So the exceptions, I will say, are, for example, when we acquired the board and card studio Peak. That was a studio, an asset acquisition out of a company. So they became a Zynga branded studio on day one, but that fit the mold of that particular acquisition deal, or framework, I should say. Whereas the others, like Graham and Small Giant and Peak, they have already demonstrated success in their own right. And our mantra to them was, we want to create an environment where 1 + 1 can equal 3 for you and for us and our shareholders, which means that you do what you do. Take a look at all of our menu of options that we have in terms of capabilities, technologies, employees, plumbing, just call it company plumbing. And you, as the new member of the family, can opt into any, all, or none of the things on this menu. And we're not going to force you. We're not going to require, we're not going to rebrand you. We're not going to take away your identity or culture. All we're going to do is just observe and provide assistance on an opt-in basis whenever you need it. And then when things get tough, which we all know in gaming, there are times when there's a code red, or something breaks, or there's a consumer issue. Then we kind of lean in a little bit and say, how can we work together to solve this issue, and then extricate ourselves as soon as the problem is solved. So it was a really good, harmonious city-state relationship, to your point.
Yeah, and so to be clear, this was by design, right? This was kind of part of the framework of what you were doing. So that's what's, I think, important from a perspective of
EA guys. They will admittedly say that they learned a lot from how not to do things at a lot of the acquisitions there, and how
right. You got Bromberg, you got what
Frank, you got Jer, you got BK, you got Ryan, the chief people officer. You got a whole bunch of folks.
Dude, it's like he just rebuilt EA Redwood Shores. It's like unbelievable what Frank did with that.
I was the only, until our chief legal officer came in from Tesla, I was the only non-EA person as part of the new senior management team. So I felt like an honorary member of that mob.
Right. Just wait, hold on one second. To the extent that you can answer this question, and if you can't, you can't, right? So the initial Graham and Small Giant deals have these absolutely massive earnouts that continue to drag profitability for as people look at it from a GAAP basis, right? Even though most Wall Street analysts ignore it and look at it as non-GAAP. Well, okay, you can say that, Mr. Petrovic, but the cash flows are going straight to these acquisitions in like insane numbers. Now, clearly, these things were negotiated in a way that were not not as thoughtful perhaps as they should have been. And it seems that the Peak acquisition, you guys eliminated most of the earnout stuff. Was that kind of considered not in retrospect, were those deals considered not very good negotiated deals? Or
no, I think they're tremendously negotiated deals. And I'm saying that trying to separate myself from being involved in that. And I say it because of the following. One of the other philosophies that we took with these deals, unlike what you may see in prior M&A transactions in gaming or outside, is that we didn't want to set up a framework where we were gaming the system such that we knew that the new addition to the family would never get their earnout, because you don't want to set up an environment where you're already disincentivized as a leader of a studio, knowing that you don't have any light at the end of the tunnel. So we set up these frameworks in such a way that if they hit and exceeded mutually agreed upon benchmarks, which we were super happy with, we were more than happy to pay them. And despite GAAP basis, non-GAAP basis, the profitability, the health of the business, because these are just temporal things that will eventually wane over a number of years, because earnouts are not perpetual. And so by the time the earnout is over, you assume that you have a company that's at such a steady state that then you're recouping all of that early investment through the earnout, in addition to the goodness that you got as evidenced by the rise in the stock price since the inception of these deals. So to me, these are just temporal necessities to bridge valuation gaps for high growth companies, whereas Peak was already at a steady state. The nature of the cap table and what Sidar and team wanted to do was just to be bought out and allow to continue to operate as they had been. And there was no need to do an earnout, because there's no, that company is not in super high growth mode like Small Giant was when we acquired them. So they are forever franchise mode, steady state, very predictable. And there was no perceived valuation gap in terms of what they were valued at the moment in time that we bought them.
And so, Chris, speaking to that which shows that joining Zynga, some of these companies were able to scale more and to achieve more success. So I wanted to actually go back to your comment about 1 + 1 = 3, because one topic of debate right now is, in a sort of decentralized, what Eric is calling city-state model, what are the synergies? And so when you think about a lot of the companies that were acquired by Zynga, and when they're choosing some of these a la carte menu options from Zynga, what would you say are some of the things that have created the most synergy, have helped these companies achieve their targets to earn those earnouts that created the most value?
Sure. It's a great question, Joe. So I would say at the most mundane level, but super important, is when you think about a company like Zynga or any other company that's been around for a long time and has invested a lot of its resources and money into building, as I mentioned earlier, the plumbing of a company. So the not sexy but important part of what makes a company run are, everything from kind of the central services to the administrative layer, legal, HR, finance, accounting, technology, cybersecurity, facilities. All of these things that make a great company run and hum are things that emerging companies eventually have to deal with when they get to a certain size. But the vast majority of them, at least the ones that I've spoken to and that became part of Zynga, all they want to do is just make great games. They don't want to have to invest in the plumbing beyond what they've invested in today. So imagine being able to plug into that infrastructure, and all you have to do is worry about being a great game studio and hiring local people, and that that things like provisioning of computers, onboarding of employees, benefits, phones, like all of the administrative stuff, contracts, reporting, payroll, all that stuff is now taken off of your plate. That incrementally all takes up bandwidth of you and your leaders. And think about Small Giant. There were 35 people when we acquired them. And imagine at a company, if they stayed independent, how much they would have had to reinvest in the plumbing versus reinvesting in the game and in UA, which are the two, and obviously people related to both, which are the important parts of a business. So the non-sexy stuff is the plumbing, but then the other stuff is just the institutional knowledge. Zynga being a portfolio company that has 10 plus years of data of how games have behaved in both success and failure can avail that pattern recognition to these studios who are doing it for maybe the first or second time. And we know enough about what good looks like and what things should be concerned about, where they may not have that. So that product management, data science, analytics, all of those things, the more sexy game related things were really also important. And establishing the rapport and the relationship where we were seen as a trusted partner, seen as acting in their interest versus our own. And again, that opt-in, menu, if you will, just made them empowered to feel like it was their decision, which it was on when they wanted to take advantage of these things.
But also, I mean, you gave them blank check for UA, right? To some degree.
No, not a blank check, because remember, they, in earnout structures, there are guardrails around what needs to.
No. Sorry, let me rephrase. So
Yeah.
basically, you could scale UA to whatever level made sense for the business, right? So they had access to more capital in theory, right? So
No, they only use their own capital.
Oh, really? Okay.
Yeah, it was like, they had to manage their own P&L and balance sheet based on how the business was going. So they were accountable for their own business unit and could only spend up to up to what made sense for them as a business. Now, I can't say that there weren't one-off discussions where certain things were discussed and agreed to that were just needed on an ad hoc basis. But for the most part, those guardrails.
It seemed like they just got more confident in scaling the business after they were acquired, right? Because the revenue just went.
Yes.
So like something happened, right? Where they were spending more money on UA, whether it was their own money or the confidence to do it because they were part of a bigger company, but anyway, okay.
Yeah. Also, I mean, we were helpful in having them, make more informed decisions around their UA tactics and strategies, whereas Small Giant up to that point was very Android heavy. And so we helped them think about, ways to approach, iOS, and opened up. When you're a company as big as Zynga, you work with several hundred UA channels around the world in any given moment. To be able to avail the pricing, even the pricing on the UA is helpful on an enterprise basis versus a one-off studio basis. So those kinds of things become really helpful, and then they can test and invest more money in more channels to find more users, and it just kind of scaled from there.
Yeah. And Chris, sort of one of the rumors or kind of word on the street is that after Zynga acquires a company, Central might send a team up to kind of share best practices or the playbook. And so to what degree, because in some studios, there's a very kind of like not invented here, sort of like very closed-mindedness, but in your experience, how open have acquired studios been to kind of new practices or adopting some Zynga principles or practices that are potentially more effective?
Yeah. So going back to what we were talking about earlier, again, my understanding of how Zynga operated before was that upon acquisition, they would just parachute people in, kind of like an internal affairs group, to sit there and monitor and help the situation. We did not take that approach. Again, going back to what I described earlier, it was very much observational. It was very much opt-in. And what we did was provide observations, feedback loops, access to data across the enterprise in a way that made the new addition to the family feel that we were being honest, that we were being forthright, that we were being open, and we were acting in their best interest. And at the end of the day, also, when we did our homework around culture fit of management teams, it was very important to identify as best we can those folks that we felt would operate in a collaborative environment, as opposed to just taking the money and giving you the Heisman and saying, thanks, now don't talk to me, don't come see me. But we needed to prove ourselves. So it really wasn't a heavy hand. It was, again, very observational, very much of a recommendation type collaboration, and very much information and data sharing, so that they saw the proof is in the data, and you can't dispute that. And so once we were able to demonstrate enough instances where our observations or recommendations or thoughts were proven to be correct, then when they would come back the next time, they would have that in their mind, and there would be incrementally more legitimacy that was built up over the course of that relationship building.
Got it.
All right. So the one question that I've actually wanted to ask you, even at Kabam, was like, what are the one or two acquisitions just got away that you had an opportunity and you just didn't do it for whatever reason, that you would like, if you could have a do-over, you would do it for sure?
So one this is going back to my GameStop days, but I pitched the idea to management, and you guys may or may not know that there was a pretty modest history of acquisition there. We bought Congregate, we bought a streaming game technology, we bought a developer. Like there was a really lower level stuff, but on par with what the company appetite was. But there was a point in time where I had a strong opinion about GameStop getting into the publishing business because of its relationships with the console manufacturers and with Steam, and its ability to create. We all know the power of first party exclusive content right now, with Microsoft and Sony and Nintendo being the main purveyors of that. But back in the day, it wasn't as relevant, and I was advocating for us to go after the THQ asset as it was kind of in trouble. and going through different, I think eventually filed for bankruptcy and then got bought out by Nordic. But establishing a first party label with an existing workforce, an existing stable of IP that we could then convert into exclusives within this global store footprint and really drive adoption in a really special way, to the detriment of other retailers at the time. So this was kind of a hybrid retail digital thing. But they eventually did a small scale publishing label for indies on Xbox and PlayStation, which I don't really think amounted to much. But that was one that I really wish that they would have had the intestinal fortitude to pull the trigger on.
Right. How about at Zynga? Anything that we've seen over the last 4 years that?
Just for posterity purposes, I really wish that I could have reunited with our old Kabam folks that became Fox Next.
Right.
And kudos to Scopely for getting that asset. I think, there was as a company like Zynga that is public and has to be a lot more transparent about the accretiveness or dilutiveness of deals, that one had a shining star in Marvel Strike Force, which you and I have our fingerprints on by virtue of having done that licensing deal and helping the studio get up off the ground. But at the same time, it had a lot of other things that were dragging it down as a total enterprise. And that would have been a harder story for us to sell than a private company that doesn't have to be as transparent about what it acquired.
Right.
But love that team. Love Aaron, love Jason, love everybody there, Yoko, et cetera, and would have loved to have reunited with them just for my own personal edification.
Well, I will say one, I just wanted to throw this by you. I remember at Kabam, we looked at Playrix for like pennies on the dollar, right? And that company, before they came out with their big games, and I remember Kevin was like, no fucking way am I going to travel out to the Ukraine and manage a studio in Ukraine, right? And I'm like, now, it was like, I think it was like 100 million at the time or something really low, definitely within our wheelhouse. And now it's like worth more than Zynga, right?
That is a big consideration, by the way. And I hope you let me go on a little bit of a tangent, because one of the things that I firmly believe now in this age of COVID and what the future of work and travel looks like is that, companies need to set up more distributed management organizations, not so much to be the overlords, but just to be present in the geography where a lot of their operations are. If you assume that getting on planes and seeing each other in person is not going to be back to normal for the foreseeable future. And I even believe that for M&A purposes, I was really nervous about the impacts of COVID on a team like mine at Zynga, where we were all based in the Bay Area. And I was believing for the longest time that we needed to distribute that organization so that we could, especially with our track record of having done the majority of deals in the European region, being on the ground there so you can travel on shorter haul flights or by car or by train and being more nimble so that you're not losing out to the good folks at Embracer and Stillfront and MTG and others. That is going to continue to be more and more important. And I hope that more companies embrace that reality, because it's going to be necessary. And I think that, to Kevin's point, nobody from California or the US wants to travel to the Ukraine on a regular basis, but it would be better to have regional leadership that could do that on your behalf and act as your proxy. So
right. And by the way, in Kevin's defense, Ukraine was having issues. There was still having war issues, going on. Yeah, right. Yeah. So I understood. His point was really well taken at the time, but it was just such a, I don't know.
Man, time for, on another podcast, we can talk about my experiences traveling to Ukraine and Belarus and Latvia and understanding how business is done out there. It's a similar and yet very distinct dynamic from what you hear people talk about when they travel to Asian territories and how business is done.
Right.
It is, but a lot of this is born out of necessity in terms of the ways companies operate and the kind of games that they make, and it's super fascinating. Same thing with India, where Zynga has a huge studio. The mode of doing business out there for that market is just so markedly different from anything that we experience here, and appreciating those differences is what makes a company more likely to be successful on the global stage.
You actually mentioned Stillfront and Embracer, and I just wanted to get your quick thoughts on these consolidators. So my opinion is that Stillfront is basically getting some decent assets, but Embracer just seems to be picking up whatever they can find, right? So yeah. I don't know. What do you think about the future? And the valuations are insane. Like these stocks are going crazy right now because of the rest of the market as well. So what do you think about the long-term viability of Stillfront and Embracer and Consolidator. MTG, what did they just acquire recently?
They acquired Hutch, the racing.
Hutch, right. Yeah, that was
a lot of money. Yeah, for a lot of money.
Dude, sorry, I know I've been ranting about this for like weeks on this podcast, but Jesus Christ, 225 million for that company is crazy. It's crazy.
Right? Plus the ability
plus the earnout. They make like racing games that make peanuts, It's I looked at the company before. I was like, okay, anyway. But what do you think?
One thing this industry has to understand is that scarcity breeds competition, breeds increases in valuation because for better or worse, my time at Zynga, we the outcome of it is that we kind of started the charge of the current wave of consolidation in the gaming industry, and I think people understand the importance of scale. They understand the importance of continuing to fill the pipeline with great talent and looking at it around the world. So I think to your point about Embracer and Stillfront, Alexis and I from Stillfront had a conversation recently. We were both. It was a mutual admiration society, as you can imagine, Crest, because like you said, I'm so nice. That they were, they're executing a playbook similar to Zynga's, which is they're taking a central management and a decentralized studio approach and bringing on talent at levels that they can afford. And that's important to remember. Not everybody can afford the same things, but you have to start somewhere. And then hopefully there's enough success on those foundations that you can, we are a very long way from PuzzleSocial, right? Which was a sub $50 million deal going to 2 billion with Peak, but we needed to get there. And I believe that that's what Embracer and Stillfront, albeit Embracer in a more frenetic way, in that they have to announce all 13 deals on one day. And they use that preceding quarter to line them all up, which is kind of strange to me. But Stillfront is executing at the same playbook, just currently at a smaller scale. And their bet is that they're going to continue to be able to do that as success stacks on top of success.
But I mean, I fundamentally feel like this is when the music stops and the impact of COVID and things go back to normal, relative normal for the gaming space. These guys are going to just get destroyed, right? I mean, they don't have the assets that can actually contribute games that are competitive in the market. Now, Stillfront's a little bit better than Embracer. Embracer just bothers me, right? Because there's just no market for their content, right? That I can see, and their valuations, they're buying things at insane valuations.
I think we're in for a reckoning, Crest, to your point on in the 2021 comps compared to 2020, and having to market year over year based on an unnatural year that was most of 2020 is going to be rough for the industry, especially the public markets. The private, obviously, less so. And you hope that you've gotten enough goodness during the COVID time that you've either re-engaged with enough lapsed people or engaged with enough new people that they're staying with you. But if history is any guide, once things get back to normal, people tend to get back to normal activities, whereas now they have an overabundance of time to spend on recreation like gaming. So 2021 is going to be an interesting year from a valuation.
Yeah. Joseph, do you want to move on to the market, or is there anything else you want to ask?
For that, just wondering, Chris, from your perspective, who else is left out there? Now, certainly might be some rationalization in 2021, but is there, I mean, if you're one of the consolidators, or let's say you're Glue and you got Hutch taken out from under you, like whose
prediction was that that Glue was going to buy Hutch? I remember hearing that.
I think it was several. I think we heard it from several different people, but yeah.
It's just no one wants to work at Glue because it's a fucking terrible place. That's why.
Come on, Nick's done a great job in getting it to where it is compared to where it was before.
Dude, that company's just going to collapse upon itself next year. You want to talk about someone that's going to have a tough comp going forward, right? He's selling. He's selling the dream. Dude,
let's keep it positive.
Sorry. Okay, moving on.
Do you have any names in terms of anyone left remaining out there?
Yeah, it's funny when we look at our war room and kind of look at the board of names and logos. It's so interesting because on the one hand, you could look at it, from an analytical perspective and just say, who are the top independent companies by charting position, right? By revenue. Yeah. But then you have to distill down where they are in the life cycle of their company. Have they just raised money? What is the management signaled in terms of their willingness to even engage? So there's the question, which you can look at, and who could be acquired or who should be acquired. And then there's who can be acquired. And that latter one is usually a lot smaller list, right? Because there are varying reasons why companies don't want to be acquired or aren't ready to be. But if you were just looking strictly on numbers and performance, it's hard to argue against the Coinmaster guys out in Israel. They're doing some really amazing work. The Lily's Garden folks are doing some amazing work out of Copenhagen. And it's to me, it's always exciting to see new/emerging companies that are able to break through what is usually a pretty exclusive club in terms of top grossing and sustain. And so anytime you see something like that, you look at Genshin Impact. I mean, that thing came out of nowhere and now is just a blitzkrieg of a game. Who could have predicted that studio at that moment in time would have captured lightning in a bottle? That's what's really exciting about our business, is that you just never know. Just when you think that playing field is set, it gets disrupted. So I think there are admittedly fewer opportunities to scale, but there's also creative, public to public stuff. There's takeouts like what Warner Brothers was thinking, even though that's not on the table now. You're going to see a lot more creative things happening and a lot more different entrants getting into this space.
Got it. And Chris, just maybe even going back to Kabam, were you there for the acquisition of Exploding Barrel Kabam Vancouver?
That was they had done that just before I got there. So Cress, that was on Cress as well.
Oh yeah, that was more of an acqui-hire. That wasn't even really a acquisition. They were really struggling. Yeah.
I guess you could argue that M&A for whether it was for Kabam and for Zynga has been very transformational, right? Like all the growth at Zynga since you got there, Chris, has been all through the M&A. And so I wanted to ask you about that part in terms of like having the nose, or when you're trying to find companies, what are you looking for? Now, it seems like, as you mentioned, you've got maybe a spreadsheet and you're looking at revenue and things of that nature, but how do you find some of these opportunities, or what specifically are you looking for in the companies when you're looking for your targets?
Yeah, I mean, it all starts with going back to the framework discussion about, having alignment internally about what it is that you want. What would you like to have, but more importantly, what it is that you don't want, so that you can cut out the noise of focusing on things that have a very low likelihood of executing.
Yeah.
And going back to my earlier point about the predecessor behavior at Zynga on the M&A side, it was really frenetic at the top of the funnel. They would just put in game companies. It was almost like a competition in terms of how many new companies you could engage with at a given time. And even with a more disciplined approach, my team and I would touch 200 to 300 companies in any given year through a variety of means. And imagine if you just kind of were doing 3x that would be very inefficient, because you're just having to sift through a lot of stuff that ends up being not relevant. So having a disciplined view about what it is that you want and don't want is number one. Number two, having people inside the organization that just love to play games. And we empowered everybody throughout the organization, from game teams to central, to come to myself and my team with observations about games that they were having fun playing, regardless of platform. And that was always a good, because I had, when I left, it was a team of myself plus 3 others. It's really hard to cover the world, even from a data-driven perspective, with just 4 people. So we rely a lot on the extended organization to bring ideas to the table about studios and games and companies. And then just being out there and talking to folks, talking to folks like you guys, talking to, bankers and advisors, talking to leaders and studio heads at conferences and other events, and just being fans of their games and letting them know that. And I think the best leaders of game companies, or companies in general, are always keeping a good balance between operating the business, which should be the primary focus, but keeping lines of communication open. I can't tell you how many times it's personally frustrating, but also I think frustrating for the founders, when they just will refuse to engage, refuse to talk, because admittedly and understandably, maybe they just got burned in a prior life. But at the end of the day, you never know how the world is going to unfold and what your needs may be. And so, the mantra of not being a dick, applies here as well, which is it doesn't really hurt if you manage properly the interactions with folks on the other side of the table. And we also, in the course of building those relationships, spend a lot of time. Graham and Small Giant were 18-month, relationships that were built prior to the acquisition. I know Sidar from after I left GameStop and before I joined Kabam. We were talking about me joining the board of Peak at the time. And, I went out to Istanbul to meet with him and the team. So I had known him for almost 10 years before we did the deal. So relationship and long game is really key, even though what you'll notice is when we move quickly on deals. And then that seems like a short game, but the build up to that is super long and very engaging and full of conversation and storytelling, really just telling the story about what we're looking for, hearing their story about what they're looking for. And hopefully you find a natural fit that's organic as opposed to trying to force something.
That's a long time to seal the deal. You're dancing, right?
Yep. That's true.
A little known fact, I don't think Chris Petrovic plays a lot of games. If I remember correctly.
Congrats. Come on now.
You need other people around you to play the games, right?
I am level 1364 in Lily's Garden. I've topped out at level 150 of Call of Duty Mobile. And I'm also on level, with the Harry Potter puzzles and spells. I am level 462. So.
All right. Do you he just flipped me off. All right, moving on. Current state of the mobile, or do you want to, is there anything else?
Yeah, actually, just thinking based upon your experience in terms of like what not to do or lessons learned, could you talk about some of that?
Yeah, I love this question because it gives me an opportunity to just impart some words of wisdom to companies, studios, et cetera, that are eventually at a path or could eventually be acquired at some point, just looking at it from a buyer's perspective. And the thing that I always tell folks is that irrespective of whether it's me or somebody else, please be mindful of preparing your company and administering it and running it in a professional manner from day one. And what I mean by that is have your shit together in the back office, because there's nothing worse to your process, your credibility, the optics of your company than when you end up having those conversations, whether it's investors, board members, or acquirers, and you're handing people, manually generated Excel spreadsheets and Google Drive documents that are incomplete and data warehousing that isn't secure. All these things that I understand that early stage companies have to operate fast and loose because they're moving so quickly, but take the time and surround yourself with people that can help you set up the infrastructure of your company and instill best practices. Hiring, like you can imagine how many early stage companies hire without employment agreements, without documentation, and without all the things that you should be doing that can be outsourced and can be automated at an early stage. So it's not really that laborious. It's just, if you don't know about it, you don't know to think about investing in it. So, prep yourself, view yourself as a company that's going to be $1 billion company and will need to have that infrastructure regardless of what the exit ends up being, if at all. But do me a favor and just build the solid foundation of your house early on so that you can be prepared and have to be less burdened in the future when you have to retroactively, reverse engineer the framework of your company or the infrastructure because you didn't invest in it early. That's one piece of advice that I love.
That's sage advice, Mr. Petrovic. Yes. All right, current state of the mobile industry. You kind of mentioned it. Actually, you mentioned it very specifically, is that comping this COVID thing in 2021 is going to be a big challenge. And then we have IDFA likely coming in March timeframe is kind of what people are talking about, which happens to coincide with the exact moment in which the market just went nuts, right? Both on mobile and console for that matter. So yeah, what do you think the impact of IDFA is going to have on mobile, and who's the most at risk, and how can you mitigate that risk at Zynga or other bigger companies?
Yeah, I think, obviously we won't know the full effect until it's out in the wild, right? But there are prognostications all over the place in terms of opt-in rates of users from, 20% up to 80%. And so nobody knows. But one thing I am encouraged by, and I'm saying this, in a abstract way, but, our industry, gaming in general, but mobile in particular, because of the nature of the duopoly of the platforms and their ever-changing rules, mobile has had to be so agile and nimble in terms of reinventing itself and adapting to the changing currents and rule sets. And I'm pretty confident that the combination of the developer community and the ad networks are, if for another reason than for self-preservation interest, are going to put their brains together to figure out solutions, call them workarounds, call them solutions, to mitigate but not completely eliminate the challenges that are going to be coming with IDFA and presumably Google following suit with that. The good news is, if I can say good, maybe in air quotes, is that it's going to impact the entire industry. So it's not specific to one company or one genre or one geography. Maybe on the margin, there may be folks that are more impacted in terms of people that are in, that rely more on, low DAU, high ARPDAU, so maybe more core games, because IDFA and targeting and finding those VIPs is exponentially more important than perhaps the hyper casual folks that don't rely on IDFA as much. I think publishers with a captive audience in one or more genres that are at scale are going to create their own versions of IDFA. I think it's called IDFV, where you're kind of tracking users within your publisher portfolio of games. And that can perhaps mitigate both on the buy side and the sell side of advertising. And then diversification. I think, Zynga is well positioned because it's a highly diversified company, both from a genre perspective within mobile, and then also having the view that I'm really bullish on, that segues into kind of what's next for the industry is the future potential of cross-platform. So, companies that are at scale, companies that have dependable annuity streams and audience streams are going to be have that as a foundation to use as a hedge against the risk. Folks that are smaller in scale, that are maybe all in on one genre, that are still emerging, that are going to get less smart about how their UA is spent as it continues to get more expensive. I think the mid to long tail is going to be hugely squeezed here in the early days of this rollout.
Yeah, let's talk about cross-platform for a moment, because Genshin. First of all, I'm actually a little bit shocked that Zynga hasn't really made any moves in building PC, other studios outside of mobile. First of all, but or console for that matter. But
I will tell you a little sneak behind the curtain. It's not for lack of trying or being in process. I can tell you that.
Okay.
There's been a number of rumors that things are being worked on.
Well, I mean, even the news that that they opened up the Austin studio to work on the Star Wars game, right? So, I think, look, you look at the management team and where they came from. You look at the developer capacity and the expertise. It's ripe for building and then eventually buying. So I have no doubt that Zynga is going to continue to be aggressive on that topic, because it's one that I feel really passionate about and did there and still do. So it's just a matter of finding the right fit, because you're ultimately, well, think about this, Cress, and you know this. If you're trying to, like, my view when I was looking at company opportunities in this PC console space was to focus on free to play developers. And by definition, there aren't really that many that aren't named Valve that are independent out there, right?
Right.
So by definition, you're already culling down the addressable audience of potential new entrants into your family, because combining a free-to-play live service culture with the retail premium culture is oil and water in my mind, right? And so trying to meld those together, some people have different views, and we had those really healthy debates and discussions at Zynga. But I think when you're trying to bring in capacity and capability to publish and develop games for PC and console, ultimately, if you believe that you as the foundational company, that free-to-play is going to be what perseveres as the business model, which I tend to believe, you need to have people in your organization that are building those games with that in mind, because that's what you're going to drive toward in the future. So part of it is just the scarcity of available targets at scale in the free-to-play AAA world. And I think that'll just emerge over time, because one of the things I'm encouraged about when I talk to VCs that invest in gaming is that they're seeing more and more pitches from studios and leaders that are coming to the table with cross-platform as their vision. Whether they can execute is TBD, but I'm encouraged to see that wave is starting to build at the early stage, and it's eventually going to bubble up to the later stage.
Yeah, actually, I'm working with Tim Ernst and Daniel Erickson on Thought Pennies, which is making a RPG, cross-platform. So,
that's right.
All right, so I guess we're gonna have to wrap this up relatively soon. So, what's next for you, dude? You've done it all, right? You've boiled the ocean for what, 10, 12 years now? Like you've been
20 years total, but who's counting?
Yeah, but in gaming,
it's been like 15 years.
15 years. So you basically know everybody. You know where all the bodies are buried.
Not at the mansion. No bodies at the mansion.
Right. And I don't even want to talk. So I can't even imagine what happened at the mansion, but we'll maybe that's for another time off the mic. But so what's next? Like, what do you want to do? You going to go back to work at EA, go for the Borg, or?
I've never worked at EA, so you can't say go back to work.
Okay, but I mean, go back to a big company is what I kind of meant to say. But,
yeah, no, I as you guys may have read, I posted my kind of open letter about why I left, and it had nothing to do with Zynga or the merits of the job or the company. It was really just a personal decision to try and refactor the setup of our family, and we're getting out of California as of this Saturday.
Good timing. Taxes are going up to like 18% or something nutty, right?
That's
Freaking
right.
Gavin Newsom, dude.
It's crazy. I mean, so all those things that came into our consideration. So I'm just taking the rest of the year off to focus on that and focus on the holidays. And then, come the new year, I don't know, maybe you guys will need an associate producer here on the show.
You got to think a lot of the Chinese companies are going to come after you, Chris. Depending on,
I don't know what that means. I don't really know what that means, but hopefully,
but NetEase, ByteDance,
Yeah, I mean, would you?
We got Biden as the president now, so.
Yeah, right. Biden. Yeah, there'll be a. Yeah. Anyway, does that sound interesting to you to go do something for Tencent or NetEase or something and be their guy?
Yeah, I think I'm gonna, just like I did when I went from GameStop to Kabam. I think one of the things that I've settled on in my mind is I want to take a little bit of a break from the public market. I've been really blessed to have had a number of conversations from really great companies in that sphere to talk about potential ways to work together. But I'd say for right now, it's going to be not in the public realm. If I have my druthers.
And we've talked about this before, so I apologize if we can cut this out if you don't want to talk about it. But do you want to do more of an operating role as opposed to corp dev? Like, do you want to run a company?
Yeah, I think just the totality of my history is much more than just transactions. And I think, I came into Kabam and Zynga at a very opportunistic time for myself and the company when I already kind of in my most optimistic of filters saw what the future foretold for those companies. And it turned out that there's been success on both ends, but it was never the extent of my desire, from being an entrepreneur back in the late 90s to operating businesses and investing and doing deals. Like I've had the good fortune of having quite a ride that has allowed me to do a lot of different things, but operating and being accountable and steering the ship, those are things that are really interesting to me. And I think there's a lot of great companies in gaming and beyond that may be able to benefit from having me, be an oarsman there.
All right. Well, I have one last question from my side. So you mentioned Lily's Garden.
Yes.
Word on the street, Tactile, that name's being thrown around like crazy. So there's a lot of buzz, but nothing, we don't see anyone pulling the trigger. Where does Tactile wind up, in your opinion?
I think, as Borjan and his team have just built an amazing company, again, nobody would have seen them coming, except for themselves. I think they had the confidence to go after a market and take inspiration from some of the things that were working in that category and build on it, both from a game design and also from a UA perspective. Knowing him as I do, I think that they're going to continue to be heads down. I think they want to prove that they can build more than one successful game, and they want to leave a longstanding legacy for themselves, for Denmark, for the games industry in that part of the world. And I don't think he needs to worry about what is the outcome for him, because it'll become self-evident, as he continues to be successful. So I would love nothing more than to be involved in his business. And I've told him many times, but to his credit, one thing I admire about him, like many founders, is that they're really true to their North Star. And his North Star is to build a great games company that has proven itself over and over again. So I think that's going to take a while. And they're well capitalized, and they have great folks there and around the world. And I think they're going to continue to do great things.
For Denmark.
That's right.
All right. Well, thank you so much, Chris, for coming on.
My pleasure, guys. Had a blast. Been a long time admirer of this podcast, so it's great to finally get on it.
And I'm hoping Zynga will continue its reign and continue to have success. But I get a little bit,
that they can prove you right. Continue to prove you right.
Well, I'm actually, in all honesty, I'm not really too bullish on Zynga right now. Not because you left, but because the IDFA, I think, is going to destroy them in a lot of ways. And I think they are not prepared, as far as I understand it. But I wasn't going to talk about that with you. But anyway, thanks again for coming. Very interesting. I wish you the most success in what you do next. I could see you as a CEO for sure. Anyway, thanks again,
buddy. I appreciate that. Thanks, guys. Have a great holiday, and we'll catch up in the new year.
All right. Sure. Bye.